Welcome to Bar Charts Market and Close, and Happy New Year. I'm your host, John Rowland, Bar Chart Senior Market Strategist. In our show today, market rotation among the Mag 7 plays out again. I want to give you my 2 cents about Venezuela and oil. Healthcare seems to be on everyone's theme for 2026, but if you've been following us, we've been ahead of the curve. So is it time to buy, sell, or hold? And finally, Thomas and I will have a debate about value versus opportunity. All this plus your questions. And to help me, of course, is Bar Charts tweeter Tom and R Mr. X. Hello, Thomas, and Happy New Year.
Happy New Year, John. How was your holidays, your festivities?
Well, unfortunately, like the market sometimes, I had the flu between Christmas Eve and New Year's Eve. So it wasn't that good, but it was nice to spend time with the family and get them all sick as well.
Yes, actually, I think my mom had the same thing as you, John. She's been knocked out for about 10 days. She usually bounces back after 1 or 2 days, but this one took her out. So
Yeah,
I
it's
feel
been
your pain.
nasty.
It is. It is. I keep hearing about it. So, all right. We got a good show, John. We got some topical things to discuss. Do want to jump in. But before we do, just a quick reminder for everybody watching directly on our website. If you want to ask a question, just click ask a question at the top right. You'll see it in the orange color. And if you're watching on YouTube, go ahead and ask those questions directly in the chat. And then John and I will get to as many as possible. John, so let's kick it off with a stock we've talked about before, and that, of course, is Amazon. Now, I just want to remind everybody in late October, before Amazon had their earnings, John, we did a segment on Amazon. We talked about how it was the value play of the Mag 7. And we were asked going into earnings season, which of the Mag 7 stocks would we most want to own? And we both were in agreement that we both wanted to own Amazon. John, it shot straight up on earnings. I mean, absolute blowout performance. It has since given most of that back. So I think people are still asking the question, okay, when is Amazon's time going to come? John, we turn to you for that answer.
Yeah, I think that's time is now. So, this is also a story that we also have been, you know, looking at for the let's say the last couple of years. So we were talking about this rotation inside of the Mag 7, right? I think we identified it in Microsoft almost 2 years ago, and then I don't know, it was a mid summer we thought about Google was a great opportunity, and that thing just absolutely ripped higher as well. So it does look like inside the Mag 7, occasionally what happens is one falls out of the favor, and then the other ones, as the other ones continue, but then they finally catch up. I think the Amazon story was that maybe it got a little bit of ahead of itself, maybe as of last year. It was trading like 30 times its forward PE. The earnings certainly were good. That we'll look at the chart in a second where it did bust up, and then then the market backed down. Pull up that chart for me, though, Thomas, if you wouldn't mind. But I think what we have to take in consideration is that that we did get this big rally after earnings, but then the market fell back. And when we were doing our production meeting, I was talking about, hey, I think this was more about what was going on in the broader market at the time. You got to remember the market was really nervous between late October and early November, and there was a lot of profit taking in the tech space, in the Mag 7, and if the broader indexes all retreated during that time. So I think this is more of a condition of the weighting of Amazon. But in recent days, Thomas, technically, on Wednesday, our trend seeker gave us a new buy signal. That was what you see here. This is trend seeker here. And, I'm looking at the chart, we're breaking above this resistance that we've been in since, well, I don't know, mid-July, between the 215 and 240. And we made a new multi-week high You can see there multi-week high, and if we look on the monthly, we even a new monthly high. And these are two positives when I'm looking for momentum in stocks. Now, I did a show on Wednesday with Jim Van Meerten about who does our chart of the day, and he has a custom viewed chart. And one of the things that Jim likes to look at is for momentum is that he likes to see how many number of new highs in a month. And you can see that Amazon is at the top of that list. Plus, also, the trend seeker is a buy, but it has an 88% buy opinion based on our 13 technical indicators. It has lagged the weighted alpha of the indexes, but it is gaining momentum. You can see most of that momentum has come in the last month and probably even more likely in the last week. So what I did on this one, Thomas, is I bought some cover. I did a cover call spread. In other words, I bought the stock outright. Now I already have exposure to this based on indexes. But I bought the call, I bought the stock outright, and then I sold a higher call. I sold the March 260, and I got $8.80, which represented about 3.6% of the price of the stock. So if I get exercised, in other words, Amazon goes above 260 between now and March, I'm going to make about a little bit more than 10% on my return in about 70 days. I think I'll take that any day of the week. And that $8.80 that I collected on the call is going to buffer my downside risk from where my purchase price was to below this breakout level of, the 38.80 level. I think it comes out around $36 for me. So, again, like I said, we all have exposure to Amazon. I think this is more of an options swing momentum play. I just feel like Amazon has been lagging. Fundamentally, they're announced that they're going to go into auto sales. Their prescription drugs, home deliveries is starting to take off. AWS, cloud services, is doing really well. So, this company has basically a monopoly in the consumer discretionary space. So I think there's a lot of positives on this. And now we see a lot of momentum. So that's the play I did this week. And I'm going to be watching this one for the next couple of weeks or so.
Yeah, I think as far as my portfolio, John, Amazon's one of my largest holdings. I have no intention of selling it anytime soon. I don't see any companies ever, well, I shouldn't say ever, but anytime soon anyway, being able to challenge what Amazon has built and what it has going on in the future. So regardless of short-term fluctuations, John, I'm very confident with Amazon going into the future.
Yeah, it certainly feels like there's a strong momentum, especially among inside of the Mag 7. This has definitely been one of the ones that's performing well of recent since the beginning of the year.
All right, so let's switch gears, John. The big news story in the last week is what has been happening in Venezuela with Maduro, the removal of Maduro, and I think it's funny if you look at the Venezuela stock market, John. I don't know if you've seen this. Their stock market has gone absolutely parabolic since the removal of Maduro. But the real sort of talking points, John, centers around oil. Now, Venezuela, I believe they're either top three or they're number one, John, with the largest proven number of oil reserves. So they are a huge player in the crude oil space. What do you think this geopolitical event might have, John, towards the impact of crude oil price going into the future?
Yeah, well, I definitely wanted to give my 2 cents on this event. As you all know, that my background is in the energy space. So, I want to kind of relate my experiences and what I'm hearing through, colleagues and the whispers, so to speak. But it seems like everybody jumped into this space on this news. But the reality is that the estimates that it's going to take somewhere between 110 and 180 billion dollars of investment over the next decade to return their production to the pre-Chavez era, which was somewhere between 2.5 and 3 million barrels a day. Right now, they're producing right about 1 million barrels, and that they need a large capital inflow, which is a risk actually. If we think about when we talk about the realistic market right now, is that they're going to need about $35 billion just to maintain over the next 12 to 18 months, just to maintain, that production or output that they are currently doing at the time. Now, the CEOs of the major oil companies, Chevron, Exxon, ConocoPhillips, are demanding boots on the ground and guaranteed securities, as well as uh, financial guarantees from the U.S. government and some very clear contractual agreements. Now, this is before they will even return to a country where they previously lost billions of dollars. And you can think of a lot of like that old expression, fool me once, shame on you; fool me twice, shame on me. So I don't think there is any rush to put capital at risk, especially in the current oil oversupply environment that we are seeing globally. So um, here's kind of my take. The spokesman for ConocoPhillips said, and this is quote, premature to speculate on future business activities or investments. And Conoco is owed something like $10 billion in compensation from an arbitration from the nationalization. And my sources tell me that this is a non-negotiable starting point for them. Now, however, in the short term, Chevron does still have a presence in Venezuela. And as of recent days, the loading of crude oil is the fastest rate we've seen in 7 months. And most of that crude oil is going to be bound for two refiners in the Gulf Coast, Phillips 76, stock symbol PSX, and Valero, VLO. Now, if you're not familiar with Venezuelan crude, it's a very heavy crude, and there's only a handful of refineries scattered around the world in our Gulf Coast, as well as China, that can handle this very heavy crude. So, I think in the short run, these two refiners are going to benefit from availability. There's another smaller refiner. I don't know if there's a company called Sinclair. If you remember the green dinosaur, it's a very small one, but they would benefit as well. So here's Valero, and it's funny, Thomas, is that we did talk about Valero back in October, as I thought there was a momentum trade, and based on this cup and handle, and I just left this up from our last time we did the discussion, and we said that we needed to break out above the all-time highs and an ATR confirmation, and we kind of got a tease. We got there. Maybe this was a breakout, fake out, but we didn't really get that full confirmation, and then prices of around the world fell, and now we are back above there. So I think that is a much stronger case that we could measure our move and look for that target around 200. That's not too far away from here. So I don't know how much juice is in the lemon, so to speak. If we look at Phillips 66, oops. The chart I think is a little bit more favorable. Again, a lot of nice momentum based on some technical inputs. But again, look at this from a big picture. We talked about V bottoms, and if you can break above the resistance area. Again, this is something we already looked at these ones. We set a target around 157, and then this kind of little cup and handle that we just recently saw targeted right where we're at now. So I think both of them are going to benefit from the release of new Venezuelan crude. Um, but then we have to ask our question is, it is the market going to be able to absorb these refined products? Gasoline, demand has been falling for the last 5 years. Freight demand, for trucks and trains and boats, and that's been about flat. It's really only in the airlines have we seen an increase in demand for refined products. So I don't know if this is a great play. I certainly think in the long run, maybe Halliburton and Schlumberger might be the plays as money flows in there. But I think the market has kind of jumped the gun on this one. So I'd be a little cautious across the board. So cautious definitely on the infrastructure for now, and maybe a little bit more favorable in the refinery play.
So, John, one area of the market that we've been very bullish on for quite a while is healthcare, and you've given some picks before. I think we're still in agreement that healthcare has a ways to go in terms of its bullish performance. I know a lot of money managers. I've seen hedge funds kind of scaling into healthcare stocks over the last few months, John. Um, what is your sort of position on the overall healthcare space now? And are there any new sort of ideas that you have for possible investments?
Well, let's look at it. I think we can just use bar chart as a tool and discover some opportunities, if not opportunities that we've already shown in the past. Um, you know, I think what we're talking about here is, over the break, I watched a lot of these, end of the year shows, and everybody's making their predictions for 2026. And it seemed like everybody is all in on financials, healthcare, and a continuous leadership from the tech space. But so here's the performance based on sectors from last year. But let's go back to about the beginning of October, and this is kind of where you and I have both, I think around end of July or through about October, we were starting to highlight a few healthcare stocks. But you can see healthcare is the best performing sector. If we look at this from the lens of moving averages, you can see that across the board, all of our moving averages, we have a lot of participation. That is a very strong sign in this particular space. And if we open up this space, and again, my friend Jim Van Meerten, I think, has a really great custom view that you can use. And now, by the way, I wanted to show you guys this for a second. Let me give me a second here, Thomas, because I forgot about to set this up. But you can go into the tools section, and under the tools section, it says bar chart custom views, and you can find Jim Van Meerten's custom views. Now, you're going to have to create the custom view yourself, but the data fields are found in there. So that's if somebody's asking about that. Okay. So again, let's look at this first of all, let's look at this from a performance over the last 3 months. Regeneron is at the top of the page. And correct me if I'm wrong, didn't we talk about Regeneron sometime back in October or November, where we thought this was, a downtrodden that was ready to move, Thomas? Yeah.
We did indeed.
And, again, what we talked about was, we wanted to see it above the 750, and then look for that target for that gap fill. The other one I think we had talked about was Merck, um, which again, this stock I feel like is done very, very well in the short run. And it's coming close to what I say is probably some near-term target resistance areas between, let's say, 118 and 125. And the other one, which I told you that I invested in, was Bristol Myers, and this one is done decent as well. But you can see they're all getting sort of kind of close to those near-term or longer-term resistance levels. So the question really, I think, Thomas, is, do we let this wave of enthusiasm, or what we're hearing from all the pundits who are telling us that money managers are going to put money into the healthcare space, and then as we get to these levels, we need to have a plan. We've talked about this before, and to ring the register when the market gets there. And that's going to be my plan. I'm going to stay with these stocks. I'm not going to add to my position. But I am starting to think about doing some risk management in terms of maximizing my profits. So again, let's look at Jim's screener, and he loves to look based on weighted alpha. But again, if we look at those who are showing momentum, number of new highs in a month, there you go. You got Merck, you got Regeneron, and just down here on the end, we have our Bristol Myers. Okay, Thomas?
All right, John. So we've had a few kind of exciting news developments this week, John, but there's one that really caught my attention, and it's because it involves two stocks that we have talked about routinely. Google has now surpassed Apple in terms of market cap. This is the first time this has happened since 2019, John. This is kind of exciting for me because both of us, we were pounding the drum. You can't find a person out there, John, who was pounding the drum more on Google than we were on market on close. So I feel kind of vindicated about this. I know you do too. But here's now the question, right? Okay, Google has blasted. Apple has kind of faltered a little bit, John, although it had a decent run towards the end, but it is faltering the last week or so. Between these two stocks, John, which would you rather own going forward? Google or
Right.
Apple?
Yeah, this is a good debate, and I thought you and I needed to kind of talk about this. I think, as terms of big picture, long-term investment, I think we both agreed that we would rather own Google than Apple. Would you agree with me on that one?
Long term, certainly. Yeah, long term, definitely.
Um, but in the short run, has Google gotten ahead of itself? I mean, it's almost literally doubled, or more than doubled, right, in this year. Where we is kind of similar. Think about what's happened with Apple in the context of what we just looked at with Amazon. This does not look very healthy, right? It feels like it's kind of changed its course, changed its direction. Now it has fallen back into an area of former resistance. There's a little bit gap here. We are pretty close to that gap. So I think that could be supportive to it. Below there, you can see, then we can see about 234. So the question then, Thomas, is back to you, is why do we want to buy Apple? Is this for an investment, or is this for a trade? And I think in your world, being an investment is, then why would we want to invest in Apple? What things that we could note that would say, hey, maybe Apple is at value here, right?
Yeah, I mean, I think there's two things here, John. I think Apple has generally been getting punished by the market for not being at the forefront of AI investment. I mean, when you think of companies that are AI pioneers, I don't think anybody has Apple coming as a first thought, right? I think Apple is really well down the list. Um, the other thing, though, is as far as a trade goes, I have heard nothing but positives about this current iPhone upgrade cycle, John. Now, this is going to be an anecdotal point, but I've had an iPhone 12 since early 2021, and I just made the plunge, John. I just made the plunge. I went out and I bought the iPhone 17 Pro Max. It was a hefty investment, and this is potentially a problem for some people, but I decided it was worth it. I love my phone. I've heard nothing but positives from people who have bought the phone. So I think it's going to be a strong upgrade cycle for Apple. The question is that enough? Is
Right.
being a really strong phone maker, is that enough for a company, Apple, to justify this valuation that it's currently at?
or the swinging pendulum, right? And again, I own an Apple 12 too, and I'm very happy with it. But I think at some point we're going to find out from Apple is that they're going to say, "Hey, we're not going to support a lot of these older phones as we move towards these new technologies, the AI agents." But this has kind of been Apple's game plan for quite some time. You know, that their playbook is that they wait and then they adapt to new technologies. Right? I would call them kind of like a fast follower. Right? They're not a pioneer, so they wait for the market to get it right, and then they jump in. And so maybe this is a good story for them because they're letting the Googles and the Microsofts of the world spend all that money on all these AI data centers and all this stuff, and then they're just going to buy the service from them. And it's kind of what they've done with Google in the past. So maybe that is a smart move, but this has been their book for years. I mean, think about the battery life, or upgrading to new cellular standards when they gone from 3G or 4G and 5G and all that, and even like the display technologies, right? They've always kind of been lagging behind, for instance, like Samsung. So I think this is their playbook. I think this might actually be a positive for them. And I do agree with you, this idea that as we go into a new product cycle with them, where they're going to force you to upgrade and allow you to access all of these new features on Apple, I think that will be benefit. But from a technical aspect, again, as a trader, I would rather own a stock whose chart is looking at 100% by opinion. In other words, all those technical indicators are very strong, than one that has a low value and is still below its well, it looks like it just turned today. It's a 100-day moving average. So again, let's see where it is. Oh, there it is. Yeah, just today did it pop above the 100-day moving average. So again, I think I'd rather be in Google than Apple, but maybe there is value in Apple. Right? Again, that rotation of the Mag 7.
And I just want to share one parting thought on this, John, because we talked about it in our prep call, and I think it's important to consider. Um, you know, you have a lot of analysts, John, investors, traders. They criticize some of these Mag 7 companies for spending so much on AI, and then you have others who then criticize Apple for not spending enough. So at times it feels like there's no way to really make the investing community happy. But I will say this: there is a lot of talk about AI being smoke and mirrors, and it's not going to fulfill the promises that have been made. And a lot of these companies that have invested all this capital are really going to be reeling once that AI bubble bursts. If that does happen, John, and I'm not necessarily saying that it will, but if it does, Apple might be laughing all the way to the bank, while these other companies who lost all this money, Apple's not going to have that same problem, right?
Or that the cost to access that availability, that data availability, let's say the cost that they're going to have to pay Google will come down a lot because there might be competition maybe from China or something like that, where they might have had to cost them $15 a phone. Now maybe that cost comes down to $5 a phone or something like that. I don't know. I don't know what the outcome is, but I do think that because of their playbook, that might actually benefit them in the long run, right?
Definitely.
Okay.
All right. So that is going to wrap up our main show. John, I cannot remember a time where we finished up the main show in just under 30 minutes. It feels like it's been a couple of years. But we have been getting a lot more questions, John, from the audience. So I think you and I are going to make an effort to kind of keep these shows to 30 minutes so we have more time to
yeah. I think we'll cut down the subjects and try to get to some of those questions as well. Yeah.
So guys, if you're watching on social, as always, John and I are super grateful if you would share these, retweet it, give it a like, leave a comment, tell John and I what you liked, what your favorite investing idea is. We do look at those, and we do appreciate any feedback we get. All right, John, with all that being said, are you ready for some Q&A?
Yes, sir.
All right, I'm going to lead off with a question, John, that I know you've been sort of aching to talk about. That's Tesla. Do you have any ideas about Tesla right here,
No,
John?
I haven't looked at it in a while. I think before we left on break, I did think that it was looked like a profit taking opportunity that had gotten to an all time high, and then it just really kind of didn't have any kind of follow through, and you can kind of see that. But again, we're coming into a new year. New money is going to start flowing in, the Mag 7 and all that stuff, and that positive passive income. So this is kind of looking similar to our Apple story, right? Off of its all-time highs, found a level of support in a previous range, and I'm again waiting to see. I thought it was interesting that Musk said a couple weeks ago, or while we were on break, that he was talking about all the stuff that he wants to do, but he did say that he was very concerned about the expansive rally in many of the metals markets, and particularly silver. And he thought that might be a very strong headwind for all of the tech companies, including himself. So, are their costs going up? And, have we really gotten any new revenue from a lot of these new ideas? So,
John, can you take a look at Eli Lilly?
Lilly. Again, I think this is a health space story, right? I think we can go right back here. So, where is Lilly? So it's if we do based on gyms, it's got a lot of nice momentum, right? 9 new highs. Um, you know, uh, Jim calls it the green red light theory. So he likes to see green lights all the way across. So it is down over the last 5 days, but let's see, what is our 52 week is at 36, and our weighted alpha is above. So that would be a positive 100% buy opinion. Um, so this one is continuing to benefit from the weight loss. But again, I thought that was a bit of a crowded trade. I think the last time we looked at this one. So maybe we need something else, another catalyst. I know that their competitor might be coming out with a pill, right? Um, Nova Disc, right? So I like this. I like the space. I like the drug weight loss story. But again, maybe this one has gotten a little frothy in the short run.
John, we got a question on Regeneron. I can't remember. Do you have any options trades on
No,
currently?
I missed it, and then I got sick, and I just didn't do anything. So yeah, I missed it. Be honest with you, it was a little upsetting, but that's trading sometimes. I was looking at buying a deep in the money leap around the 660 level. They've done very well since then. And again, the objective was waiting for it to get it close to that $875, $900 area, and then take profits on it. So, I do not have a position.
Excuse me. On Jim Van Merten's long stop flip chart, if
Yes.
the green dot is above the 50-day moving average, does it matter how far or close it is to the 50-day moving average, John? Is there any differentiation made between that?
So, if folks are looking, it's under bar chart templates, and you're going to go down here where it says long term stop. And is this for Eli Lilly or
This is for
Regeneron?
anything, just in general.
Just in general.
Yeah.
I would be concerned when the trend spotter deviates very far away from the 50-day moving average, as I do with say the 200-day or any of the other moving averages. But as long as the trend spotter is mirroring the 50-day moving average, right, then I don't have any concerns, and I've just let the trend seeker do its work, and just continuing. Again, this filter uses turtle channels. As long as we continue to make new highs, and we still see upsloping trend seeker and 50-day moving average, and that would be a positive for me.
John, any thoughts on Netflix?
Again, this is one that, we get a lot of old dogs that we talked about, right?
Yeah, we've talked. We haven't. This is one we don't talk a lot about. I think it's under its 200-day, John. It's been under its 200-day for a while. It's kind of stuck in the mud right now.
Yeah, this is a hard one for me because, first of all, I do love owning stocks of companies that I use their products. Yeah, I would like to not pay as much as they charge me, but of all the services out there, I don't know about you, Thomas, but I always start when I'm looking for something to watch. I always start at the next fixed play page.
Yeah,
I don't know how about you, right?
definitely. Yeah.
So it befuddles me. But again, you have to respect what the market is telling you. We might not know something about it. Certainly, the market seems to know something. And to me, um, it's as an investment is below the 200-day, and as a momentum trader, I'll be more likely to look for shorting opportunities or put opportunities in options than I'll be looking for going long. But again, if we look at this from a higher time frame analysis, we are getting very close to a recent level. I would say right about there, a recent level of technical support. So what's that about? You know, between $80 and $85. So let's see if it can hold, manage base, and then change its momentum to the upside.
Oxy. Oxy is a stock we talked about a long time ago, John, but it's a ghost. We have not talked about it since. How do you think it's going to do in this current environment?
I do think that energy space is going to be one of those ones that has been a lagger that I think money will start to flow in, especially if we see this ideal of a secular commodity run. We do have the problem of oversupply, global supply, but Oxy is also in a lot of other parts. They have a little bit of refining. They're into like carbon capturing. I just think they're kind of a little bit of a mess right now. But again, if you look at this chart from an ideal of stabilization, sideways, bottoming action, again, it's something that looks like I've been looking at this one for a while. But you and I have both been burned by this stock a couple times, right?
Yeah, I dabbled with it once, John, and actually that one time that I chose to dabble in it, it actually worked out quite well. And then I just kind of I'm not an expert on Oxy or its mechanics, the mechanics of it, so I sort of drifted away from it, John. But yeah, it's a popular stock. We get a lot of questions on it. I don't know on Oxy, John.
If it was a heart patient, I think we would be calling the priest, right?
If it was a heart patient, it would be like that the heart monitor going off for a while and then just magically coming back on, John, and then doing it again. All right, let's see what else we've got here. Small caps, John. IWM. It's been actually
Yeah,
been performing quite well. In fact, I put out a tweet yesterday that it was outperforming the Nasdaq uh,
yeah,
at the biggest margin since April. So, what do you think? Is now
yeah.
finally the time for IWM?
I don't think it's. I don't think there's a need to rush, but it certainly has look again. And if we look at this in a bigger time frame, it has just recently broke out of its all-time highs, and then based, and then now it's moving again. But we said that we were waiting and waiting and waiting for that interest rate environment, that short-term interest rate environment that is difficult for these companies because they live on a lot of short-term debt for them to prosper. So I think this is kind of just a reflection of that, and it maybe underneath it all, it's a sign that there's a little bit of strength in the small cap space. Now, the question I would have is, a lot of times we go inside the Russell, and I don't have time to do this, but is this a broad based rally across all of them, or um, is it one or two? A lot of times you find that if you break down the Russell, you'll find a lot of small regional banks, and maybe what we're seeing here is this is more of a reflection of the money that's going into the financials. Plus, you get again healthcare and biotech, so two sectors that seem to be attracting money as well.
Let's see, John. Any thoughts on Nvidia?
Not really. Again, you know, I continue to hear whispers that Nvidia is uh, meeting challenges uh, abroad, the competition, um, and this whole financing off the balance sheets. And I'm going to stay on the sidelines on this one until we get maybe another earnings report. And I think they're always late, so would that be about end of February? So if I was in this one, I would say this would be a hold for me.
I did see an interesting headline this week, John, about Nvidia entering driving autonomy. Maybe they're going to challenge Tesla and some of these other companies, John, in that space. I think they're years away from doing so. I know that's what Elon said. He's not too worried about it, but I thought that was interesting that Nvidia would go down that path.
Well, there's two schools of thoughts here, right? First is are they deviated away from their core business? I've always noticed that, like, when companies try to do it all, and they get away from their core business, what that's made them profitable, they trip up, right? Or is it that they're really trying to diversify and finding other avenues for their chips? So that's why I'm saying this. I don't know if there's a real direction here, or is they kind of just throwing stuff at the wall and seeing what's sticking. So yeah,
I think they're just trying to dominate in every single human capacity, John. It feels like.
yeah. But then you got a lot you got a lot of money out there, a lot of fingers in a lot of pots. There's a greater chance to get burned too, right?
Absolutely.
So
All right, let's see. Oh, here's a good one. Silver implied volatility on SLV is now 68. Usually it's around 30. So it's got to come down fairly soon, right, John?
no, it's futures markets it's a whole nother game. Volatility is a whole nother game. Um, what is the historical implied volatility? I mean, I'll see if I can find it real quickly. Um, maybe it is in line, or maybe it has come back down. Um,
I pulled up
yeah, we
I
don't.
pulled up SLV on our volatility charts, John. SLV ETF and
Yeah, the
historical
ETF.
yeah, historical volatility is normally about 57.5%.
Okay, so there
So
you go.
yeah, it's elevated, but it generally is with
Right, but it is in the 97 percentile, right? And in terms of rank, it's still that in that high 80s. Just telling us that, yeah, maybe 64 implied volatility. If you think about, that's certainly not that high compared to, let's say, like a crazy tech stock. But in the world of silver, or an ETF, I mean, that's probably as high. It just means that the market is, because of you maybe say the premiums are more expensive, and then maybe you want to sell it. I mean, I'm guessing that is what this individual is kind of hinting at. But that is really a way for the market to kind of trap you. In other words, oh, look at our high premiums, and that's a way for you to take on risk. That's the way how they lower risk. Think about like a gambling, or how the football line moves to attract people to take the other side. So just be careful with silver. We've talked about silver on multiple occasions.
We did have a good comment on SLV from Cycle Trade. He says that SLV RSI is only 66. Now that is true for the daily, so it's not even overbought on the daily. But
Mm-hmm.
if you look at the monthly, the RSI jumps to 91, so it's very extended on the monthly chart.
Right. Um, so there's MACD and RSI, and this is it has come off somewhat on the daily, but you're saying the weekly. Yeah, I
The
mean,
monthly it's 91. Yeah,
yeah, we'll look at even the weekly.
yeah.
So a lot of fire, a lot of
Um,
opportunities to get burnt.
let's see. I think we're gonna finish it off with one final question. John, any thoughts on General Mills?
Gosh, I would love to. I kind of, this is always one of the stocks I always kind of like. It just this space, the consumer staple food space, has God. It's just that that is a depressing looking chart. Maybe a little bit of a V bottom. You guys know how I like my little, my, my looking for those that three candle drop or that kind of that cascading sell off. So there could be a short term bottom here, maybe a dead cat bottom here, um, and maybe a rally back up into the upper $40 range. Maybe the bottom. I know that they just changed the food pyramid, but if you look at you look at all the Campbell's soups, I think you talked about is at a multi-decade low, right? And
Yeah.
Kellogg's, they're all struggling. So it's difficult business, not a lot of margin and growth. If you're playing these stocks, you're probably playing them for, what do you think? The dividend, right? It's
Yeah.
paying a 5.5% dividend.
And I just pulled up. If you extend the chart, John, and maybe make it a 10-year chart, you'll see just how bad it's done. It's actually at almost 7-year lows, which is kind of crazy. Campbell's soup, the same thing, right? I mean, it's just
It's just it seems like a difficult space right now. You know, again, investing seems to be more gambling nowadays, and everybody wants, the exciting new game in town, and cereals and soups are not very exciting, are they?
the question will always be, what are they doing for AI, John? What are these cereal companies doing for AI?
Exactly. You don't need AI, right?
Yep. All right. That's going to do it for today, guys. Quick reminder, John, we are off next week because it'll be Martin Luther King holiday weekend. So, guys, enjoy that. We will be back the week after.
Yeah, then we'll have a nice run, right? Right. Thomas is traveling. We got you're on assignment for us. Can you tell folks where you at, or is that still a secret?
Well, I'm in Singapore right now, headed to New Zealand on Sunday. So I'll be doing some hiking in the New Zealand mountains next week.
He's going to be examining those Asia Pacific Rim countries for us to see if we find us some trading opportunities, right, Thomas?
That's exactly. I got my notebook and my pen handy, John. That's exactly what I'm doing.
All right, safe travels, my friend. Folks, appreciate spending time with us. I hope you guys found some alpha from today's segment. Until next time, best of health, manage your risk, and the good of all trading.